Our
Pleasure.
next guest says now is the time to shift focus from valuation gains to earnings growth. Fidelity Director of Global Macro, Jurrien Timmer, joins us now. Jurrien, great to have you with us. Welcome.
Good afternoon.
You're pretty bullish when it comes to this rally that we've seen so far.
Well, it's been obviously a very unusual cycle. I mean, we can credit the pandemic for that, and we're still feeling, the effects from that. So the market bottomed, in retrospect, it's easy to say, but it wasn't so much in real time. But the market bottomed October 2022, and then this January, the S&P 500 cap-weighted index finally made a new all-time high, which any technician or market historian will say, okay, those are the bookends for a bear market and the beginning of a bull market. And the S&P 500 equal weighted index started to make new all-time highs just a few weeks ago after 26 months of sitting in limbo, basically. And a chartist will look at that and say, that's more likely than not a basing pattern. And, valuations are very high, as we all know, 21 times forward earnings, 23 times trailing earnings. And typically at this stage or by this stage, the baton would have been passed from valuation gains to earnings gains. And the good news is that those earnings gains are happening and that the market is broadening. 81% of the S&P 500 stocks are now above their 200-day moving average. And fourth quarter earnings season was really good. The estimated growth rate going into earnings season was 1%, and at the end of earnings season, it was 8%. So we have some good momentum, but the market has a lot of growing to do to start coming into its valuation, and that I think remains the challenge here. It's poised for perfection, and as you just discussed, even little things that might happen later than sooner, like rate cuts or earnings gains, leaves the market kind of not over its skis, but it needs everything to go right here.
Jurrien, you just mentioned the equal weight S&P 500. It's up about 5% year to date versus the market cap weight about 9.25 or so. So we still have this outperformance from the concentration of these large names. When I think about the large names on a day like today, or just look at the way an Apple trades, right? Look at the way a Tesla trades. These were two of the largest stocks in that top 10 or whatever, the S&P 500, and you're kind of losing them. They're kind of losing their growth story. I mean, clearly losing their growth story. So when you want to shift from valuation to earnings now, if we start to see some of these companies that have been massive outperformers, let's say we get a downshift of growth in the back half of the year, that could set up a pretty nasty scenario for the S&P 500, which you just said is expensive about 21 times.
I mean, it has been a conundrum to kind of war game, if you will. What happens when the Mag 7, or, I look at it as sort of the Nifty 50, because we've had episodes like that in the past. What happens when they lose their momentum? Can it be a bullish broadening where the rest of the market sort of picks up the slack? Or is the power of those Mag 7 so great, because they comprise almost a third of the overall index, that if they lose their way, the index has to go down? And so I am heartened by, just the year's only, 3 months in, but I am heartened by the fact that, the market had to really walk back from an unrealistically large number of expected rate cuts at the beginning of the year. I mean, market was expecting 6, 7. It's now, down from there and probably still too high, but the market's been able to do that without falling apart. And even, with the Mag 7, as you just mentioned, they're starting to fray, but it's not really, hitting the market, at least not yet. And so I'm heartened by the resilience in the broader tape, and I think it highlights the fact that 493 stocks, not to exaggerate, but a large part of the market has been sort of in this market purgatory for over 2 years, just sitting there doing nothing, being in a long trading range, while the Fed was obviously raising the cost of capital and while earnings declined modestly. And now, presumably, as that vice gets lifted from the market with the Fed, maybe giving back a few rate cuts or a few rate hikes, that the rest of the market can start to breathe again.
Jurrien, thank you. Jurrien Timmer.
Welcome.